Those numbers on your screen feel real, but they are built on debt, promises, and confidence, not cash.
Banks don't lend money. They create it, crises, out of thin air, paladins, the moment you sign a loan.
Every dollar in the system is born as someone's debt. And the system cannot survive without it.
Once you understand how money really works, you'll never look at your bank account the same way again.
Early American banks issued notes redeemable in gold, but the system was fragile.
Periodic bank runs exposed the illusion. Crowds demanded gold that wasn't there.
Entire banks collapsed overnight when promises exceeded reality.
Governments doubled down, creating central banks to backstop the illusion.
Banknotes promised gold that only existed on paper, expanding credit beyond reality.
Entire banks collapsed overnight as promises exceeded reality, forcing central intervention.
The public began to realize that the promised gold might not exist.
The vault did not hold wealth. It held confidence.
Central banks were born not to protect money, but to protect belief. When belief wavered, stability could be printed overnight.
In crisis, speed mattered more than truth.
Losses were never erased. They were transferred.
When reality threatened the system, rules adapted. The illusion survived, and the world moved on. Modern money is no longer printed. It is typed. With a click, new money entered existence.
Debt did not follow money. It created it. No vault opened. No cash moved.
Money appeared because someone promised to repay.
One loan became many claims.
As long as belief holds, the system survives.
Interest never pauses. It only compounds.
Inflation arrives quietly, one price at a time.
Each new dollar quietly weakens the last. The system must grow, or be end, or it must fail.
Wages move slowly. Prices do not.
This is not a flaw. It is the design.
Those closest to money creation benefit first.
Financial markets rise with liquidity.
Assets absorb inflation and grow.
Workers pay through lost purchasing power.
Banks earn interest on money they create.
Power concentrates quietly, without announcement. Governments borrow without immediate consequence.
Collapse begins quietly.
Fear spreads faster than money!
The money was never fully there.
Once it starts, it cannot be stopped.
What collapses first is belief.
Institutions fail when confidence disappears.
The pattern never changes.
Sell it! Sell everything right now! We're ruined! It's all gone! Get out while you still can!
The cost was paid by ordinary people.
Confidence was insured.
The structure was reinforced, not removed.
Central banks emerged stronger than before.
The lesson was not learned. It was managed.
Risk became acceptable when failure was cushioned.
Debt disguised itself as prosperity. Risk was transformed, not removed.
When payments stopped, the system felt it.
Decisions were made behind closed doors.
The collapse went global in days. Trillions were created to stop the fall.
The system survived. The lesson did not.
The final restraint was removed. Banks no longer needed reserves at all. Credit creation faced no physical ceiling. Only abstract rules remained.
Confidence became the fuel.
Money lost its final anchor.
Modern money is governed far from public view.
Risk is managed through numbers, not reality. Safety became a label, not a condition. Power shifted quietly, without a vote. Democracy, watched from a distance. Control without visibility became normal. Risk was shifted, not reduced.
In the United States, reserves disappeared entirely.
Europe relied on ratios instead of reserves.
Different rules, same destination. Emerging markets still held physical constraints.
There was no safe alternative within the system.
Debt became universal.
Different paths, same machine.
Debt is the fuel. If debts vanish, so does money.
Borrowing is encouraged, not discouraged.
Debt is structural, not optional.
Participation is not a choice for most.
As long as debt flows, the system survives.
Your debt keeps the machine alive.
Money is not wealth.
Skills cannot be printed or inflated away.
Real wealth produces value regardless of markets.
Paper promises fail when confidence breaks.
Those who own real assets endure inflation. Independence reduces reliance on fragile systems.
Real wealth exists beyond the ledger. Awareness begins with understanding.
Awareness does not require panic.
Preparation is a form of stability.
Dependence can be reduced gradually.
Preparation matters most before the break.
Understanding creates choice. The illusion holds own while it is believed. Confidence keeps the system alive. Belief drives expansion. Expansion always creates strain. The system is repaired, not rebuilt. Belief is restored temporarily.
The pattern repeats.
The cycle is not finished.
Crises do not announce themselves.
Protection is a personal responsibility.
Exposure can be reduced over time.
Dependence is optional for those who prepare.
Preparation only works before it is needed.
Protection does not require attention.
Where you stand matters.
The system is built to survive, not to serve.
Awareness changes where you stand. It is not personal. It is structural.
The illusion survives only when unseen. There will be no announcement.
Understanding is the first step toward freedom.
The illusion ends when it is understood.